effect from tomorrow if the Chinese do not come to the negotiating table. Trump's deadline for China is ending later tonight. US and European markets have rebounded.
The United States depends on the goods from China. Certainly American consumers do. They've grown accustomed to the lower prices. But this is just one example of the trade war that is going on, even as this administration is signaling it is very open to negotiation.
Something's seriously wrong between the US and China, and it's already affecting people everywhere. China just pulled out of billions in US food imports. Why would they do that now? This could push the economy even closer to collapse. Prices are climbing fast, jobs are hanging by a thread, and even close allies like Canada are stepping back. Is the US starting to lose its grip? With markets sinking and trade wars getting worse, this could turn into a full-blown disaster. Well, to know everything about this, make sure you stay tuned till the end. This time, it's not just about politics. In March 2025, China made a move that's now hitting America right where it hurts: the economy. Out of nowhere, Beijing canceled 1.8 million tons of soybean imports from the US, which means American exporters just lost $22 billion. One farmer in Missouri said, "This is the worst blow we've seen in years." And he's not wrong. The hit isn't just about money, it's about power. This was no random decision. China knows exactly what it's doing. With China controlling a huge part of global trade, 13% to be exact, this kind of action sends a loud message. It's like they're saying, we don't need to start a war to make things difficult for you. And now, American farmers, especially those in states like Missouri, are bracing for serious damage. They could lose $1.1 billion this year alone. That's not just bad news for farmers. It affects everything: trucking companies, grain storage businesses, food processors, even the folks packing soybeans at the plants. It's a ripple effect that touches thousands of American jobs. But it gets worse. This isn't just about crops. The land itself has become a battleground. China, through companies like WH Group, which owns Smithfield Foods, has long had access to U.S. farmland. Now, with the contract cancellations, there's growing fear that China could start using that land for leverage. One U.S. analyst said, "They're not just walking away from a deal, they're showing us how deep their influence goes." It's starting to look like more than just a trade dispute. It's a warning shot. And while America loses one of its biggest customers, China is already moving on. They're turning to Brazil, which is quickly becoming their go-to source for soybeans and other grains. If this keeps up, Brazil could easily take the U.S.'s place as China's top trade partner. That means the U.S. won't just lose billions, it could also lose its position in global trade. A shift like that doesn't just hurt exporters, it changes the balance of power. Meanwhile, back home, prices are already creeping up. The USDA is warning that food prices could rise by 6.4% this year. That might sound like a small number, but it adds around $47 more to every household's monthly grocery bill. For families already feeling stretched, this just adds more stress. One shopper at a local grocery store said, "It's like every week, something else gets more expensive. Where does it end?" And there's another layer to all of this. Quietly, over the last couple of years, China has been dumping U.S. Treasury bonds. They've sold off nearly $250 billion since 2021. Instead, they're buying gold. Lots of it. Over 300 tons since 2022. Why? Well, because gold isn't tied to the U.S. economy. It's China's way of protecting itself if things really go south. One financial expert explained, "This is how you build a system that doesn't need the US dollar anymore." It's a sign that things are shifting fast and not in America's favor. Things are getting even messier on the economic front, and one big reason is the way tariffs are being handled under the Trump administration. A recent report exposed something shocking. Trump's team has been using a basic and flawed formula to decide how much to tax imports from other countries. It's as simple as taking the trade deficit with a country and dividing it by the total number of goods the U.S. imports from them. That number is then turned into a percentage, which becomes the tariff rate. Sounds quick, right? But that's the problem. It's way too simple for something this serious. So let's break it down. Using this method, China gets hit with a 67.3% tariff because of a $295.4 billion trade deficit and $438.9 billion in imports. But experts are saying, hold on, this math doesn't make sense. It doesn't reflect the real situation. It ignores whether those countries even charge high tariffs on American goods. It's like punishing someone without even checking if they did anything wrong. And it gets worse when applied to other countries. Japan, Vietnam, Malaysia, even allies are facing huge tariffs based on these one-sided numbers. One analyst even said, this feels more like a guess than a real policy. Vietnam, for example, is being charged a 46% tariff, even though Trump praised them in the past as great negotiators. Meanwhile, Cambodia is slapped with 49%, even though Trump falsely claimed they were charging America 97%. And get this, some countries that actually have high tariffs against the U.S. aren't facing any penalties at all. The whole system is upside down. On April 2nd, 2025, President Trump made a bold move that shook the economy. He called it Liberation Day and slapped massive tariffs on imports from around the world. His goal? To push Americans to rely less on foreign goods and protect U.S. jobs. But within hours, it became clear that this decision would spark serious problems. Canada, one of America's closest allies, was furious. Ontario Premier Doug Ford called it Termination Day instead, warning that Canadians would soon see prices shoot up for groceries, cars, and medicine. If this is liberation, he joked, then people are just being freed from their wallets. Markets reacted fast and badly. The Dow Jones crashed over 1,000 points, and NASDAQ dropped sharply too. Financial experts quickly raised red flags. Fitch warned that this could send the U.S. straight into a recession, while Barron's magazine said this was just the start of the pain. These tariffs basically act like taxes on American people and businesses. Everything from cars to computers to food is about to get more expensive. And while Trump says this is about protecting American workers, many are now worried they'll lose their jobs instead. Canada's Prime Minister Mark Carney did not hold back either. He said the U.S.-Canada friendship was falling apart and that Canada was done waiting for the White House to act reasonably. Carney quickly began reaching out to France and the U.K. to build stronger trade relationships without the U.S. For the first time in decades, Canada is seriously turning to Europe and Asia for economic support, trying to move away from relying on its southern neighbor. Meanwhile, Europe is preparing to hit back. The U.S. is planning to tax European steel, cars, and even medicine by up to 25%. The EU's top leader, Ursula von der Leyen, calmly warned that they are ready to fight back. Europe is lining up its own set of tariffs on American goods like soybeans, tech products, and vehicles. They're also working on fresh deals with countries like India and Thailand to keep trade flowing. Businesses are already feeling the heat, like a small brewery in North Carolina that had to raise prices because of rising costs. Inside the White House, even Trump's team seems unsure about what happens next. Right now, it feels like a trade war is heating up fast, and no one knows where it's going to stop. As trade tensions continue to grow, Canada is quietly turning away from its longtime partner and finding new friends in Asia. For decades, nearly all of Canada's massive oil and gas exports, worth around $176 billion, went straight to the U.S. But when President Trump hit Canadian energy with a 10% tariff, Canada had enough. Now it's making major moves to shift its focus elsewhere. One big change came in June 2024 when China's Rangxiang Petrochemical signed a major oil deal with Canadian energy company Suncor. This deal is a big deal, not just because of the money involved, but because of how the oil is getting there. Thanks to the newly finished Trans Mountain Expansion, or TMX, Canada can now ship oil straight to Asia. the TMX pipeline boosts capacity to 890,000 barrels per day and connects Canadian oil fields directly to Pacific ports. That means Canada no longer needs to send its oil through the U.S. at all. It's a clear sign Canada is breaking free from its old trade habits. Rang Xiang isn't stopping at Suncor. The company is already in talks with other major players like Canvas, Shell, BP, and ConocoPhillips, using contracts that give both sides more freedom and flexibility. Canada is no longer acting like a junior partner in energy. It's stepping up and playing a much bigger game on a global stage. And it's not just oil. Canada's LNG Canada project in Kitimat, set to start exporting by the end of 2025, will also send natural gas across the Pacific. Until now, most of Canada's gas, about 8.6 billion cubic feet every day, was sent to the U.S. While with help from companies like Shell, PetroChina, and Mitsubishi, Canada is preparing to serve markets in Asia instead. The government is fully behind this change too, launching a $6.5 billion support plan, including $5 billion to help Canadian products reach new global buyers and $1 billion to support agriculture. While all of this is happening, something else is stirring up emotions in America. Actor Robert De Niro made headlines again, this time with a viral video slamming Trump in just 24 hours. His video got over 5 million views and hundreds of thousands of comments. He didn't hold back, calling Trump a liar and a fraud and warning that democracy in the U.S. is in serious danger. Tesla's having a rough time, really rough. In just 6 months, the company's value has been cut in half, wiping out nearly $800 billion. One brutal day saw shares plunge 15%, and even after the market closed, prices kept slipping. Investors are clearly nervous, and it is easy to see why. China, one of Tesla's biggest markets, has hit back hard with a 25% tariff on Tesla's pricier cars, up from 15%. That means Tesla's Model 3, which cost around $43,000, is now even harder to sell next to BYD's much cheaper Han EV, which starts at $30,000. BYD isn't just cheaper, it's winning. It sold 1.2 million cars in China last year, while Tesla sold less than a third of that. The bad news doesn't stop there. In the US, Tesla's grip on the electric vehicle market is slipping. It once had a whopping 79% of the market in 2020, but that's dropped to just 54% as of 2023. And Europe hasn't been any kinder. Tesla's sales there are falling by 30%. On top of that, Elon Musk's off-the-cuff comments and online antics have started to wear thin, even for fans. Do let us know about your views in the comment section below, and for more such amazing videos, please do subscribe to our channel.